Another fascinating guy who joins me right now, Alan Nuckman, the Bullseye Option Chief Market Strategist and a canny read of these markets. Alan, good to have you back. You heard what this crypto proponent was saying. 2.5% annualized returns, not too shabby. Of course, you and I know that these are very volatile, wild swing markets, so that's maybe what it is averaging in the last 4 years. But a lot of people look at that and say, 2.5%, man, what happened to the heady days you could get double-digit increases? Are those days gone for the time being, regardless of the investment?
Well, I think there's always opportunity. It's not what you trade, it's how you trade. Markets move up, markets move down. For me, I'm looking at the macro market, and I don't think the stock market's broken. I think we've seen a pullback after a big bounce, and this is the first time we've been below 4,000 in the S&P in 3 weeks after that big bounce. We held, we consolidated. Now, unfortunately, we're breaking down one more time, but we're still significantly off the lows. But more importantly is I want to talk about emotion, because you know how I always get into psychology.
Right.
The investor emotion right now is much greater than the actual fear factor in the market. The VIX right now is at 28. It was below 25 yesterday. The high for the year is 38, and let's go back to 2020. The high in the VIX was 85.
We should say that's a fear index, so we don't have the panic sense that you would think, right?
Exactly. That's my point here. So from a price standpoint, what I focus on, we were near unchanged in the S&P here just last Friday for the 1 year, for 1 year time horizon. Now put that in perspective. We've got a war going on. We've got, a lot of things happening, but I think people are losing track of the fact of how well the economy is doing. People are making more money than ever, and they're spending more money than ever. So that's what's driving prices right now. It's a reflation because people have the money.
Now, the wrinkle there is they won't have the money much longer at this rate. They won't have the clean balance sheets they had if we keep going at this rate coming out of the COVID. How do you respond to that?
Well, I don't necessarily agree because everybody's making more money. Wages have gone up dramatically. This is the largest wage gains we've ever seen.
And prices have gone up dramatically more, right?
Well, I was going to get to that point. We've also had inflation in home prices. So everybody that owns a house, 70% of Americans own a house, they've had 20% inflation in that asset. So there are sectors that have done very well. Now, to get back to the inflation that everybody is very concerned about, we've seen prices come back. And if you adjust crude oil from the 2008 high at 150 for inflation, it would have to get to 200. If you look at natural gas in 2005, we got up to 16. We're at 8.5 right now. If you adjust that high, we'd have to get to 21. So we're still a long ways away from where we've been in the past. It's uncomfortable. But again, like I said, people have the luxuries of getting the job they want or the job they don't want.
So this isn't the 70s again to you, right? Even though you weren't even around. But this isn't that.
Oh, I was around, Neil, but
all right.
It's not the 70s. If you, again, take those prices of sugar, cocoa, coffee, those record highs from the 70s, we're nowhere near that right now. Mm-hmm. I still believe in the stock market. I still see a lot here. The PE ratio was down to 16, down to 10-year lows here just very recently. So corporations right now, it's called capitalism, really. This is all about capitalism. We love capitalism. Guess what? Corporations are using this as an opportunity to make record profits. Maybe on the backs of the consumer, but they've got pricing power, they're making profits. Oil companies are making record profits. Exxon went from $50 to $100 in the last year. No one wanted Exxon 2 years ago. So you got to look at things, things sometimes are bad enough to buy.
That's why I love having you on, because you zig while others zag, but you do so with a great historical perspective. So we wanted to hear that view, because it's always one view here. But part of fair and balance of business news is to look at the bullish and bearish side as well. Alan Nuckman, thank you very, very much for that. Go ahead, finish that.